Hi everyone, and welcome to another monthly software market report brought to you by Sanford Advisors. So another really fantastic month in April. So really started the year off strong, as we've kind of been talking about for the last few months. But another $47.4 billion invested in April through M&A, 152 transactions, and the median revenue multiple across all transactions was 10.5 times, which again is a little bit distorted by some of the larger deals, which we'll talk about, but we'll talk about the longer term trends as well in a couple of slides. A couple of notable transactions. Obviously, Microsoft's $16 billion acquisition of Nuance was very large at 11.1 times revenue multiple, and then the next largest deal was Thoma Bravo's acquisition of Proofpoint for $10.1 billion, which was 10.5 times revenue multiple. So you can see, like, the strategic deals are still happening at elevated multiples of 11 times, but also that the private equity guys are paying up very similar type multiples to get the larger transactions. So what does this mean that we're kind of on a trajectory for the year? Well, you can see, we're on pace to really exceed last year's total of $180 billion. So if you annualize the current run rate that we're on, we're going to do, $320 billion this year of M&A activity. The other interesting thing, though, is the number of transactions has really reversed. We've been talking a lot about the trend of, 2018 being the peak of the number of software transactions. That really dropped off in 2019 and 2020. But we're on the current trajectory where we're really going to exceed even the previous high of 2018, which is really encouraging, especially for the mid-market M&A activity, which has really come bouncing back strong. In terms of multiples, so here's the SaaS versus non-SaaS. So you can see the SaaS multiples for the year, kind of averaging about 7 times. The non-SaaS multiples are averaging 3 times, fairly consistent on the non-SaaS side. The SaaS multiples have bounced around a bit, obviously. We would expect this probably to normalize closer to somewhere between 2019 and 2020 level. It's really being skewed by a few transactions on the bigger side, but also not that many data points where public valuations are disclosed. In terms of the run rate, in terms of number of transactions, so we've been talking a lot about the bounce back from March and April of last year. And even to pre-pandemic levels, that the numbers of transactions that we're seeing on a monthly basis kind of exceeded the 2019 average by quite a long way. So it's encouraging to see that April was the same with 152 transactions. And again, we've been talking about this a lot, but we would think this is a trend that continues for the rest of the year, where we're kind of averaging at least 150 transactions per month. On the VC side of things, another great month. So nearly just over $9 billion invested, 445 transactions, and a median deal size of 4.3. Some really large transactions, obviously, on the late stage side. So Epic Games raised $1 billion, led by Sony and KKR. Samba Nova Systems raised $678 million, led by SoftBank. So some really big transactions. Obviously, some really big disclosed multiples as well. So if you look at Plaid's multiple of 78.8 times and Scale's multiple of 73 times, these are very elevated. And I wouldn't say we're representative of where the VC market is going, but we'll talk about this in a little bit. And then, where does this mean in terms of what we're doing? So, we're going to on track to double last year's deal volume in terms of the dollars deployed, but also encouraging, like after a decline in number of transactions last year, the current run rate indicates that we'll be close to the 2019 level that we saw of 6,300 transactions. And then, lastly, just valuations. Now, this is a bit distorted because there are not that many data points. That's the problem. Not many valuations get disclosed on the VC side of stuff. So, on the early stage deals at the moment, the average is 120 times. This is obviously going to come down significantly and does not really represent the reality. Late stage deals were at around 30 times. Again, I would expect that to come down a bit from where it is. And then the mid-stage deals have come down from last year to about 14 times. So anyway, another really good month, and we look forward to seeing you next month. If you have any questions in the meantime, feel free to reach out at any point.